Hey traders, it's Kyle from K Capital. It is about 5:30 Eastern Standard Time, 2/28, 2016. Hopefully everyone had a fantastic weekend. A lot going on in the markets looking ahead to this week. First thing I wanted to do was really talk about the macro picture and see where we're at from a long-term standpoint. Apologies for the car alarm going off outside. It's probably a little bit annoying. All right, good, it stopped. So right now we're looking at the S&P 500 on the daily time frame. If we want to really zoom out and get a general sense of where we've been, I know I've been talking about this a few times over the last couple of weeks, but obviously long macro trends since really the recession. One thing that you definitely want to look for is anytime you see a pullback, a temporary pullback, you see a recovery, you want to see new highs. Saw the pullback over the summer. We went to test new highs and we failed, and we really sold off ever since. The interesting thing here is we're probably going to see an uptick over the next probably week, 2 weeks, maybe even 3 as earnings season more or less winds down. We're just kicking that off now. I think we probably test 2000, and I think honestly we trace back down. The reason that I think that is really there's a lot of selling pressure. Let me go back to what it just was on. There's a lot of selling pressure on the 2000 level in the SPX. And if you looked at the Dow, and we will in a second, you'll see the same type of selling pressure. So the fact that we didn't test and break this level here and see new highs really tells us that I think the overall trend is really going to reverse and already has started. So I'm definitely still bearish on the market. I've alluded to that several times. The second really major thing that makes me think that is we're still trading below the 200-day moving average, and we've held that level for a while now. Going on probably 6 months. So it's really a bearish story, at least for me personally. I think we're definitely going to still look for certain charts that are going to be to the downside, and really just play as many shorts as we possibly can. If we want to look at the Dow, we'll see the similar picture in terms of that setup. And what I have highlighted here is the breakthrough of the 200-day moving average. And if we wanted to zoom out and take a look at the weekly picture, you can see the last time that happened was really just in 2008 when everything really pulled back and we collapsed. Wait for that to load, which is right around this level here. So I think that's going to happen again. I think the 200-day moving average is really a key indicator for that. Right now we're holding that level, as you can see here, but I think on the weekly, once we start to test that and break it again, I really think all bets are off, and I think we really see the market collapse again, unfortunately. But we'll be looking for shorts along the way, so we'll find the opportunities as they present themselves. So let's get into a few charts that I'm looking at specifically that I found. I think 2 shorts and then 1 long. The one thing that I'm definitely looking for, and I'll just pull these up real quick, are opportunities where we're seeing a really large gap up or a large percent increase to short, or a specific pattern where we go long in terms of volume day over day is 300% or higher above the 60-day to 90-day average. That's definitely a key indicator that something's going on with these positions, and I think it's something that we have to look for our longs, and SEIN was one of those, and I'll get to that in a minute. If we want to go back, we can look at those first as that other section of the video loads. So SEIN we've added to a few times here. This was definitely a technical play, and it's also a fundamental play now. Logic being is we saw a huge collapse here where more or less the company pulled out all of their products from the U.S. market as really a contingency plan against a product they issued overseas, I think in Europe, that had a malfunction within it. So they kind of played the cautious card, I should say, pulled off all their products from every market, whether that be the U.S., international, or European. They're a South American company, and you saw the stock really tank because they weren't selling any products. Well, recently they announced that they were going to reinitiate the products back into the U.S. market, and obviously it was an $18 stock to $20 stock, less than a year ago, and I think we're going to see that play out and hopefully see an uptick in this price after their next earnings call when they reissue back into the market. I think their scheduled earnings are for the 9th of March. So what happened here is we saw a breakthrough this area in terms of resistance. We went long. We've added a few times, and I actually just added again back in the sixes. So our average price right now I think is in the 850 range. The reason that this actually sold off, I found out, was there's actually a competitor of mine, Jason Bond, who I think has issued a few long alerts with this. Frankly, he sucks. All of his reviews are pretty bad. I don't want to say he's a scam, but more or less I've read a few reviews of where he's not really done that well. I think that had something to do with the sell-off here. I think a lot of people were either selling out of his position or he was probably selling into his alert, which is pretty shady. Nonetheless, if we want to look really kind of deep dive into it, there's two areas I've highlighted here. The big breakout here on the high volume, the green candle back in the beginning of January. Saw a large uptick here and then pulled back after that. We held that level. Well, if you look, we're starting to hold that level again, and I think this is definitely people starting to buy what they're envisioning is support. What I also added here is from the low of 248 to the high of 1024. These are called Fibonacci, I should say, levels. And what that means is if you take the high and the low, there's certain levels where traders look to either add or wait for the stock to bounce off of those to retrace. And if you look, we're actually right around the 50% mark, or the 50% fib retracement level. So what that is that price is 654, and if you look, we more or less held that for the most part over the last couple days. So the major important levels are usually the 50, the 38, and the 62 are the ones that typically traders look for to see bounces in. Now you can do this type of analysis on intraday charts, scalp 1 minute, 5 minute charts, daily charts, weekly charts. As long as you have a high and a low of some form of time frame, you can kind of get these levels. I use TradingView here is the site, and they do this for free, but a lot of the broker trading software has similar analysis. So it's something that another tool, so to speak, in your tool belt to kind of look at charts and to kind of get an idea of what's really going on. So that's something I checked, and it was ironic to see that we held that level last week, and as well as the level of the blue box here in terms of the high and the low of that big breakout candle. So it's definitely something I'm watching closely. I think, again, fundamentally, it has the background here to be a huge play, if not a one or two bagger. But technically, I think we're seeing some key indicators that are definitely bullish too. So something I'm keeping an eye on. It's one of my major holdings for the time being. Other positions that we're currently in are going to be Sandridge still, which is a fundamental play on oil. I'm not going to break down the technicals here. We closed that at WTW, but it's something that I'm going to add back to the watch list as a potential short. Cisco is another one, which I definitely want to look at here. Now, granted, this is a long-term hold for us. It's really a fundamental play just because it's a great company. They pay a high dividend. I know that's not really my bread and butter in terms of the technical plays, but it's something I think could be a good position for us to hold into the upcoming quarters to see how that plays out. One thing that is very interesting is we're holding support here at 26.33 as well as the 200-day moving average. The other position I added a very small position to is CDXS. They have earnings on the 3rd, so I opened up a very small position in the sense that I'm going to add to it if the earnings call goes well. The thing that's very interesting here is, you saw a huge run up really from 2 all the way to 550, and if actually you want to really take a look at this, what we can do, I can actually show you how you would add the fib numbers on here. So you would go to fib retracement. Now you can get a sense of the low here. I probably would start there, go to the high. Alright, so what's that really going to tell us? It's going to tell us exactly what we said before in terms of the retracement points. So the 50 level is 348. We're well above that now, but the 38 level is right around $4. And as you can see, we've really been consolidating around that level. So what does that tell us? It really tells us that there's obviously at least some support at the 200-day moving average as well as that 50 fib level. Obviously, if you're going to have a stock run from 250 to 550 over 100%, it's natural you're going to see some profit taking along the way and it pull back. So it so happens that if that pulled back to right around the 200-day moving average as well as the 38% fib, Again, I'm going to wait to see how the earnings are before I open up a larger position. The initial target would be 5 on $4. I'll take that return any day of the week, but let's see how that plays out. SJR is a short position I'm still in. Frankly, I'm still losing patience with this. Right now, I think we're at a very small loss, so it's nothing really that's too concerning. But if we want to get right to the watch list, WTW is something that I wish we held through earnings, but it's not really typical. It's a big rule of mine not to do that for large positions, and right now, earnings sucked. We closed out of our short at a loss, but I think we may re-enter if we start to test and break this level here, which is 1080. I think if that does break on high volume, we definitely will see this gap fill down to 7. So that's definitely a short option. Getting back to the watch list. All right, I got 4 stocks here. So CDR is one stock that I'm looking at for the long side. I added this last week, I think, to the watch list, and it's actually very ironic because it's a similar setup to CDXS, which we just reviewed. Looking for this really to hold the 200-day moving average and consolidate more sideways before we start to test back to 8. So that's one chart that I'm definitely looking at. The last one to the long side is, and this is new, is HMSY. So this has been beaten down pretty heavily for the last year, but one thing that caught my eye is we're starting to test the 200-day moving average. I think they had a, I would say, decent earnings call last week. What technically they would be considering a beat on EPS, earnings per share, as well as a beat on revenues. So with that, the EMAs are pointing up and about to cross. I think maybe this might pop to 15 and fill this gap here from 16 or 1585 down. So this is something I'm looking for a short-term swing. If I add, obviously the target would be 15. I'm not sure on the mental stop loss level right yet. I'd have to take a look, but that's something I'm looking for the long side. I'll add this to the dashboard along with the rest of the positions. And the 2 shorter RRM, which actually just initiated a merger with, I think, another company called SCS Platform. Merger price is $13.29, so it's trading right at that price. Frankly, I'll see how this plays out. Sometimes I don't think the merger is definitive yet, so if that fails, it's actually the same thing that happened to, I think, AXLL. We could see this trade all the way back down, so it's something I'm still watching. And last is AMTG. So this popped. Also, I think on a merger news in terms of Apollo Residential Mortgage being acquired. So again, I'm going to watch this just to see if the news for some reason is, unofficially pulled back, or if the merger is not approved. You'll see this trade down. So it's something that I'm still watching just to see what happens with those potential news releases to see if potentially that could be flipped backwards. VHC was something that I did not trade to the short side. I should have. I just missed this. This was on the watch list for the last 2 weeks. Whoever traded this, I'm sure there are people that did in the community. Congrats. That's exactly what I expected here. Was a fill all the way down to that 478 level from 6. So it's definitely a good return in obviously less than a week. That's really it right now. Again, just to recap, I'm definitely still bearish across the board. We do have some long positions that have good fundamental stories behind them. Cisco, SEIN, CDXS looks okay, but let's see how the earnings call goes. And then on the watch list side, HMSY to the long side, WTW to the short side, as well as the 2 other ones that are merger plays, potentially to see if those gaps can get filled if the news is really released that it's not going to get approved. But that's all we got for the time being. Obviously, I will talk to you guys tomorrow, and this will be on the dashboard as well as emailed to you. So we will talk soon. Have a great Sunday, and if you have any questions, please shoot me an email. Talk soon.